Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, hope everybody had a fantastic holiday weekend. We got a short week this week, 4 days, Tuesday through Friday, pretty much the same routine as Christmas week. You've got New Year's Eve falling on a Saturday, New Year's Day falling on Sunday, and then we're going to be off again Monday, Globex close. So we got a couple of 4-day work weeks in front of us. And the bottom line for that is, and the reason I mention it right up front is, you've got to have your expectations in a reasonable place headed into these 2 weeks. Effectively, you know, the week between Christmas and New Year's is typically notoriously slow. It's slow, it's choppy, it's a lot of what we got into last week. It's just the nature of the beast. Once we got past the Fed, things were going to slow down for the month. So you need to watch your size, resist the urge to overtrade it, take good setups, get what you need, move on to the next day. That's the key for this week and the week following. So we're still ultimately in this trading range between 2247 and 2265. You've got a new weekly pivot. This is an hourly chart. You've got a new weekly pivot, 2260 quarter, which the bears tried to stay below for the majority of Globex. It peaked above in the last hour or two. I'll be interested to see headed into today if that area goes support, if it can hold, if it wants to be support. If it can, then you can see a move up to the top of the range there, 67.5. If the bears are able to break the weekly pivot as well as the daily pivot, which is this dotted line here down at 2258, then you could see them explore the Friday low down at 2254 quarter, and ultimately the dip buy low at 2251 half. That was last week's low. The bears are going to have to get through both of those areas if they want to go down and see the 47 range low. So ultimately 67s, 47s, we're basically in between. See how the weekly pivot reacts, see how the daily pivot reacts, and you know, ultimately I give the nod to the bulls simply because if you zoom out a little bit, you can see low, higher low, trying to be another higher low, right? We keep building higher lows. At a minimum, that should test the 67 area. Now, 67 area, the bears have had the bulls rather have had a tremendous amount of trouble getting through there. Not only last week, zoom out a bit here, but I mean, you had your 73 pop, you had your FOMC reaction high that created a double top in the area of 73. Then you had a lower high, 67.75, and that area has been tested to no avail. So you've got a couple of double tops. The trick with the bears is, the reason you can't get really behind the bears and what they're trying to do is that they can't break 47. And if they do break 47, they can't hold it. We had the one peak to 43, but that was about it. So that's a little wider zoom as we head into a new week. So watch the weekly pivot, watch the daily pivot. So 60 quarter to 58, and then 67 is where the rubber meets the road. You've got this double top area to deal with, and then 73 to deal with, and down below you've got 47. All right, everybody have a fantastic day.
Follow us on Twitter at Princeton Trader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.